Right, it is time to talk business thanks to our partners Forsyth Barr. Tech stocks have taken the US markets for a bit of a tumble overnight. Big spending plans of some of them not matching their budgets so well. Garth Bray, host of Herald Now Business, has more. Garth, good morning.
Good morning, Ryan.
So what's tumbled? What's tracking down?
Look, everyone's pointing fingers at Microsoft because its shares have tanked about 12%. She's a big fall when you're rising so high, isn't it? And that was largely because of their earnings, which came out after market yesterday, our time. And we're talking there about a 66% year-on-year jump in their spending on data centres. So still fueling capital into what's going, the AI boom. But at the same time, their cloud revenue growth, Azure is their main product, that sort of slowed. So even though they did sort of a little bit better than the analysts were picking, they're saying, well, your income's not matching it's champagne spending on a beer budget kind of thing.
Which has always been the worry, why people were talking about the bubble, right?
Yeah, and then as well, they're quite exposed to OpenAI. So NVIDIA and Amazon are part of a massive $40 billion US capital raise for its ambitions, but they're also providers of infrastructure. She's looking like a bit of a money go round, and some of that's starting to worry. And then at the same time, over one lane over in the horse race, you've got Meta, which had a bolter. They jumped about 8% in their shares, and that's largely because the revenues were up about 24% year on year in their quarterly earnings, even though they're planning to spend $135 billion US. That's more than this whole country will probably make.
So people look through the investment cost on AI, don't they? They go, don't care about that because you guys are making swillions.
The money, and they are. Even though they are losing money on some of their bets, I think one of the Reality Labs, which is their business-facing one, so their revenues they beat expectations on. So they're doing pretty well. Why do we care? I mean, S&P 500 indexed funds, that's where a lot of people's Kiwi savers are. Even your active managers are quite exposed. So how these big players move the US markets actually affects, the immediate prospects of your retirement income.
All right, tell us about this planning change for Auckland that could be locked in for a decade or more.
This is a big battle, right? So just for context, this is the Auckland's plans to sort of, I think...
Oh, the housing.
You've got to add 2 million houses, or maybe over 30 years, maybe you don't have to. Maybe we'll crimp some of that back because the plan originally involved upzoning some suburban areas, character suburbs, very blue. There's an election coming.
So we're doing a backtrack, but we don't know what's in it yet.
We don't know what's in it yet, but we've got some a nice piece in Business Desk from Thomas Manch, who's got Chris Bishop saying, look, we're also trying to do RMA change, and Auckland's kind of behind. They've been working on this plan change for 5 years. So whatever you come up with might actually wind up being locked in and operative when the new RMA goes through, rather than having to sort of redo all of that all over again. So just raising the stakes on whatever this is. Whatever this plan change comes up with could be locked in for a decade.
Okay. And seeing the longer term rates rise quicker than expected. Oh, you're talking about interest rates here?
Yeah.
I saw that yesterday. Westpac, and we've already had ASB and ANZ go up.
Yeah. And Tibrashani in the Herald, who's been very much across this, picked up that December was a massive month for people switching. So 5.8 billion of mortgage debt shifted in December. I guess people... A lot of it was on short-term in November new lending, so people had the opportunity. Banks were sort of throwing the cashbacks around, 30k in some cases, and so you saw a much bigger, I think it was about 2.6 billion in July last year was the sort of a previous time. Huge amount of switching going on there.
Which is good.
Tried to take advantage.
It's good because it means
if you're quick.
The banks, well, yes, but
some of us are a bit slower.
The banks will love it because the banks will say this proves that there's lots of competition and that people are switching providers.
And I hear they're going to be back in front of Parliament shortly for a bit of a please explain, 6-month curry up. So they'll be loving this one.
Well, those please explains always work, don't they?
It's a grueling examination.
Yeah, but then
you should do it.
Then the next day we forget about it. Nothing changes.
We'll do a recap. We'll say, well, these are the questions you should have asked.
Well, they do come on occasionally. We had Antonio Watson was on a couple of weeks ago.
I think they're trying their best to get out there and state their case, and good on them.
Yeah. All right, Garth, good to see you as always. Garth Bray from the Herald Now Business Show, which is kicking off soon, and that is thanks to our partners at Forsyth Barr. 19 minutes away.